Hey everybody, welcome to the video. We've been getting into the multifamily space as of recent with managing some smaller apartment complexes around the greater Austin area.
We're trying to find properties that we can acquire and or manage. So we'll walk through this complex, point out some things that we see that we notice, and maybe even find ways that we can add value.
Doing some due diligence, so let's check out the property.
What's up guys? So we're at the front of this apartment complex. This is a working class neighborhood. You can kind of tell by just seeing there's some business trucks over here that actually people that live at this apartment complex. They have a gate at the front, which is pretty cool. Everyone likes having a gate. Looking at the neighborhood and the front of the complex is basically one of the first things that we do. You can look around and see kind of what the vibe, the culture is around here. A lot of apartment complexes across the street, and then you have some retail, some businesses, Jack in the Box, retailers over there. So one of the things we noticed about the property is that the parking lot's a little bit older. So I think that would be something that you could come in and add value on. Also, there's no covered parking. People really like covered parking, and a lot of times they'll pay $25, $50 more in rent for that. So that's something we'd look at doing. I really love the actual property as far as the rock and the wood. I think it looks pretty good. There's not a lot I would change there. See this nail right here? This is something that actually the CEO of American Campus Communities taught, is you gotta respect the property. So it's cool to, if you're an owner, even if you're not, is clean up the trash when you see it. It goes a long way. People don't like seeing nails, or there's a bottle of beer right there. So those are things to look out for. And we'll go around here and show you guys the pool and some thoughts that we have over there. So you guys can see they have a swimming pool right here. People have different thoughts on swimming pools. They are a very nice amenity to have. There's also a liability that comes along with it and increased insurance prices. So something to think about. I think we would probably leave the pool, but clean this area up. The units all have the interior AC, so no window units, which is really nice. And it's a beautiful property. You can see there's a lot of green. There's a creek down here, which is really cool. And people love having balconies, so you can see all the units upstairs have balconies. Typically you can charge $50 to $100 more. Now we're gonna kind of walk you guys through the high level details of what the process would look like as far as if we were to get this under contract and attempt to buy this property. What are all the stages that we would have to go through in order to actually close the deal?
So after walking this property, having Matt walk through it with us, we've learned that this is kind of like this is a C-class property, right? Yep. And has the potential to be a B, right? Just with some small changes from what I've seen. So even with trimming the trees, doing a little bit more landscaping. Matt, you mentioned cleaning up around the pool, right? So walk us through how you analyze this property, and some of the details on that. Yeah,
so basically if you're looking for multifamily, you kind of want to start with getting the financial information. Okay. It would start with getting a rent roll, which would show all the units, all the tenants, and what their rent is, and the terms of their lease as far as when it's expiring. So you get the rent roll, and then you get what's called the T12, which is the trailing 12 months of financials on the property. And so the rent roll plugs into the T12, and you'll have your total revenue. And revenue, it would be rent and money coming in from anything else. Like they had a laundry room, so money coming in from laundry. Right. And anything else that you can add to add value. Sure. And kind of a basic rule of thumb that a lot of people are working with is you get your what's called your potential gross income. And then you take, let's say, 50% of expenses, and that would be for anything like maintenance, utilities, all the expenses of the property. So 50%, then you have what's called your NOI, which is your net operating income. Okay. And then in order to get a value, you put a cap rate on the NOI. Okay. So let's just throw out a quick example. If it's a $100,000 NOI, and you use it, and you're gonna use a 6 cap, which is about where people are paying in Austin, you can get down to 4. Right. As you get lower in the cap rate, the price goes up. So it works inversely. Sure. And what you do is you would take like $100,000, divide it by 0.06, and that would give you the value.
Gotcha.
So that's a way to kind of use comps, is knowing what people pay for cap rates in the area, and then use that on the NOI.
Right.
And then basically, if we were gonna make a move on this, the steps of the deal would be get it under contract. Typically you get a 30-day due diligence period. So you have 30 days to do all the inspections you need. So at that point we would go walk every single unit, try to meet the tenants, have a contractor come with us.
Okay.
Get a plumbing inspection, foundation, AC, roof.
Right.
And during that 30 days, we decide, hey, we're gonna either move forward with the deal or renegotiate. If we move forward, then your money goes hard, which means you can't back out or you lose the earnest money, which for apartment complex, it'd be $25,000, so it's a lot.
Sure.
And then you'd have probably 30 to 60 days to actually close the deal.
Gotcha.
So you get your financing, close the deal, and then the work begins as far as what's your strategy? Are you gonna buy this and keep it the way it is and cash flow, or do you wanna put a whole bunch of money into it and change the tenant mix completely?
Right.
It really just depends on your strategy.
Yeah. Hearing the terms, you know, C class and B class. If we try to jump this to an A class, I don't think that's doable, because we looked at the surrounding areas and the kind of market and the kind of demographic that's in this area. And I think, you know, turning it to a lower B is doable and reasonable as far as getting tenants in here. So that's something you have to look at as well.
Yeah.
If you guys ever need help running numbers or analyzing some of these multifamily properties, feel free to reach out to us. Make sure to subscribe to our channels and like and share this. If you have any questions, reach out. We're always here for you guys, okay? Thanks for
guys.
watching. See ya.
Peace.